Good morning, traders. Today is Tuesday, June 8th. My name is Charles, and this is the Pirate Traders live stream. Okay, so what are we looking at here in the markets? On Friday, we had a push higher with excess below, creating a gap and a bunch of single prints in the A period. Then we had balance in the overnight, the night before last. Yesterday's market opened up here in this higher level of the distribution, okay? Fell down here into the lower distribution from the previous day, and then spent the rest of the day rotating down at these levels. It pushed back higher into the upper end of the distribution at the end of the day, but it did so on weak references, okay? A weak M period low, K period low, and a poor low for the day. Okay, as always, weak references and poor references increase the odds that the market needs to revisit these levels to shake out those weak hands before it'll be ready to push higher. Sometimes the market has to break before it can rally. So the overnight opened up here in the distribution. Because it's so interesting, let me go ahead and just stretch it out real quick. So the overnight traded in this area pretty much the whole night. It explored higher prices, pulled right back in. But then it had this liquidation break a few hours ago where the market literally fell down to repair all these weak references almost exactly and then turn around, find support, and push right back up. Okay, so this is bullish to me in the argument that sometimes a market has to break before it can rally. However, I'm not going to get rid of these weak references on my chart because we know it doesn't actually count as a repair unless it happens during the regular trading hours. That being said, it is bullish to assume that some weak hands were shaken out in that move. Okay, so this morning we're opening above yesterday's range. We're opening outside of yesterday's range, so we have a gap higher. Gap rules are in play. Also, because we're outside of yesterday's range, we can look for trades immediately as soon as the market opens. We don't have to wait for the market to settle in or chop at all. As far as a gap is concerned, what I'm looking for, the first thing, of course, is the gap fill. Because most of the inventory overnight is net long, you can just see this is where they open. Most of the trade took place above that level, and we're ending above that level. So that tells us that, all right, the market is open. That tells us that, you know, the inventory of the overnight was mostly net long, so we can assume a counter auction to that, and that counter auction is likely to lead to a gap fill. All right, let me just clean some of this up. Whoops, that was the high I needed to keep. I'll remark that. Okay, so that first thing I'm looking for here is the gap fill, this green arrow that you see, a fill back down to yesterday's high. If the market fails to be able to get down to yesterday's high and it finds support prior to that level, that is a good long trade for continuation higher. If it pulls down to filling the gap and then finds support right around yesterday's high, that is also bullish. You go long for continuation higher. If it pulls down into yesterday's range, then tries to push back up and finds resistance around the high, that is a look above and fail and increases the odds of a trade to repair the poor low. Okay, so this is the level I'm watching, yesterday's high at around 42.30.50. Really? Nor Trading. Thank you, brother, from Norway. If anybody knows what he's talking about news-wise, hit me with a link. So computer systems or internet systems went down all over, huh? Well, that would explain a liquidation. So obviously we filled that gap. So the gap is filled. So now the question is, does the market find support here around the high of yesterday, which would be bullish for continuation higher? Also, the all-time high is right there. When it's that close of a target, you assume the market wants to go take that out. Also, it was created in the overnight, which means that it's weak and increases the odds the market wants to repair it. So you're this close to that all-time high. If you find support on the high of yesterday with the gap fill, that seems like a very high probability trade. Failure to find support here could be a look above and fail that increases the odds of the rotation down to the poor low. All right, guys, let's do our good mornings as the market looks for support here at the high. Can it find it? Could be. This node of volume could be buyers stepping in. Hard to say because we hit a gap higher. The internals kind of have to settle in after a gap. So we're not sure yet if this is buyers or sellers. Okay, not buyers. Okay, so once again, if this starts to act as resistance now, if the market tries to push its way back up above yesterday's high, and it can't, that is the good short for the target of the poor low left behind by yesterday's market. Good morning, Marco. Good to see you, brother. First one here. RK Leon, good morning to you. Stanley's with us. Good morning. Malcolm's back. Naif is here. Philip is here. Arthur. Apico back with us. Donkey is here. Marco already crushing the game this morning. Good for you, brother. Daniel is here. Good morning to you. Welcome. Fastly. Yeah, that's what I just looked it up. I've never even heard of them. That should be a non thing. You know, websites going down for a few hours, no big deal. It would have created, a little bit of fear and panic in the market momentarily, but that should be settled. Mediterra is here. Good to see you, brother. Welcome. Shane is with us. Good to see you. Jose, good morning to you. Leighton, good morning. Joshua is here. Good morning, Arthur. Annis is back with us. Good to see you, brother. FSLY. You don't need no alibi. Is this a meme stock? Meme stock. Oh, that's the company. Oh, great. Great. So just all logic is out the door. Okay, so we are finding support and trying to push back up above yesterday's range. That is bullish. Little reminder here. Something I've been talking about more and more lately on this channel is when we get these potential look above and fails like this, it can be very, very difficult to trade because the market can grind through this, really important level over and over again before it finally breaks one direction or the other. Um, so the best way to trade this is to just either enter a trade and then, set your stop wherever you're going to set it, depending on which direction you think it's going to break, and then just hold and just wait for it to finish what it's doing. Or the, safer option is just step aside, stay flat, wait until it's more certain what direction it's going to go. But it's one of those things where, like, you get a look above and fail like this, and by the end of the day, the market's trading down here, and you look at it in hindsight, and it seems so obvious. Why didn't I just short it there and stay in my short all day? But it can be difficult right now in the moment while it's grinding up and down through there. So that's part of what you need to manage if you're going to take the look above and fail trade, is that you might have to spend some time grinding through that level, feeling a sense of uncertainty. Yeah, Miles, we don't know yet whether the volume that we're putting in here is buyers or sellers. It seems like it's buyers because the ticks on both indices got right down to the zero and then immediately pulled back up every time they kind of poke down. So it's probably buyers, but we won't know until price pushes away from here, one direction or another. It's not good taper on the low here. 2,800, 2,137. Not good taper. That increases the odds. The market needs to push down one more time to at least, get some better two-sided trade here at the low. Um, Revolution, no, don't use footprint. Just use the profile and the ticks. Okay, so we pulled back down into yesterday's range, increasing the odds. We need to rotate down and repair these weak references below. We also are working on that taper at the low. Okay, so once again, the look above and fail increases the odds of the rotation to the opposite end. Since we're doing a look above and fail of yesterday's high, that would be yesterday's low is the target. It's also a poor low, and there are two weak references above it. Potential support could come in here in this node of volume from the overnight, which also kind of has this little node of volume from yesterday right at the close. So that's potential support right there. If not, the repair of one of these two could become support, and then if not, the low. Why is the K period low from yesterday weak? Let's take a look. Okay, the K period low is weak because it is one tick from the F period low. Okay, you have to have two ticks for good excess. One tick is weak. Okay, so not finding much support here in this first node of volume. The next target is the repair of the M period low. If you got into a look above and fail trade, please smash that like button. Also, if you're just a regular, normal human being that likes to breathe oxygen, please smash that like button. That thumbs up really supports the channel. Thank you so much. There it is. Thanks, guys. Okay, first week reference repaired. Let's see, do they find support here in this node of volume that we created yesterday? Or do we need to head down and repair the next week reference? Also, it looks like we bounced off that 20 moving average on the 15-minute candles here. That's a good sign. Let's see if that can act as support. Brian, yeah, you got it, man. They'll keep pumping those memes. As long as it keeps working, they're going to keep doing it. Meme stocks. Jesus, yeah, GME up 20%. Holy shit. Man, when they pump it, they really pump it. Wow, that is impressive. Yeah, I was literally just a moment before you posted that, Donkey, about to say, if you're in this trade, be ready to take some profits. That's so, it's like straight parabolic. Okay, so still testing this 20 moving average for support here. The squeeze was squoozed. Yeah, you reckon that's what this is, though? Somebody exiting a big short? All right, so it looks like that 20 moving average on the 15-minute candles is not going to hold. Next target is that week K period low. Yeah, I just took a look at Apple. It looks, kind of like the overall market. It's just moving with the indices here. It all makes perfect sense, right? The overnight market just got overly long. They got a little bit ahead of themselves. So we pulled back into yesterday's range. And so now we need to go down and repair the weakness we left behind from yesterday. Remember that, the market selling off is actually a way to make the market stronger in the long term because you take out the weak hands. So getting down here and repairing this poor low is actually bullish on a longer term basis. As opposed to if we had just had a gap and go today and continued higher, it would not have been good to build excess on top of weak references. So it's actually better that we come down and repair these first. Value overlapping to higher, but we are about to start one time framing lower. Also looks like that 20 moving average might act as resistance. Often once you push through it, to the downside, it then acts as resistance when you try to push back up. Yeah, Brian, I'm not convinced that there's anything leaving anything. I feel like a lot of the money that's flooding into the meme stocks is just fresh powder. You know, it's people who are trading for the first time in their life, putting their money into a lot of that. Although, you know what? Actually, take it back. After a certain point, when it gets to the like mania phase and grandma's buying it, then yeah, they'll be selling. They'll be selling S&P ETFs for it. I don't know, Trading Donkey. Sometimes I look back at the old charts Um, I look back at like the daily on the SPX pre-COVID, back here, and I just think to myself, how much fun would this have been to trade? Like, just look at this, man. It's like trends that last for weeks and weeks and weeks, and they just keep, you just buy every dip and sell every rally. No stress. Just glide up. That doesn't look appealing to you? Like from October to February or whatever, January, to just have like nothing but just green and you're just gliding higher. And then COVID happens, and all of a sudden it's like volatility, gaps, unexplained movements, chaos. Ugh. This is what you like. There's an unfilled gap right there on the SPX. Well, I don't really do much charting in the traditional sense of the word. Um, but I do use TradingView when I want to throw stuff up on a chart. Partha, yeah, those are, you got a eagle eye for looking at those references. Yes, by Jim Dalton's system, if you're one tick from the previous settlement, or one tick, I don't know about the POC, probably not the POC, but definitely one tick from the previous settlement, he would consider that weak. But it looks like we might be 2 ticks away right now. Yeah. So you could consider that weak if you wanted. It's 1 tick from the where the overnight opened, which was a tick lower than where we closed. But I'm not going to look at that as weak. I'll choose to just leave it as is. So the market's still trending down here. Still looking at these weak references below. It's good taper at the low, but it's not good volume. I'd like to put some more volume in down here. Oh, yeah, let's jump over and take a quick look at the NQ. The Q for sure. Okay, the Q still has some gap left to fill. It's looking a little more bullish than the ES. It is one time framing lower, but you're finding support inside the node's volume from the overnight. Man, you closed at the high of the day, end period yesterday. Okay, so same MO as the ES. If the ES pushes down to repair those weak references below, it'll likely pull the NQ down to fill this gap. So on the fill of the gap at 13.812, you start looking for support. You start looking for volume to step in there, create some support, and then you have a gap fill and go, right? If that fails to act as support, you increase the odds that the market needs to rotate to the opposite end of balance, which in terms of yesterday's range is down here in this node of volume. From yesterday, just above the balancing area high. So you really want to find support around the high of yesterday. Internals not really sending any clear signals here. A little more bullish than bearish in the ticks. All right, guys. Well, the market is one time framing lower. The trend is down. We had a look above and fail this morning. Value is overlapping to higher, but getting pulled lower as we continue to trend lower. We got a week reference at 42.17. Okay. And we got the poor low. So those are likely to both need repair. When we get to the poor low, that'll be about the same time we get to the 20 moving average on the Nasdaq, as well as probably fill its gap. Ooh, just filled its gap. To the tick. So yeah, looking for support here in the Nasdaq, and then same in the ES once it repairs these weak references, the poor low and the weak K period low. Looking for support there, and then rotation, right? Thank you guys so much for joining me. It's been a fun, super exciting morning. And I'll be heading over to the private stream. If you're not a member of the brigade, there's a link in the description. It only costs $10 a month, and you can stay with the stream for the rest of the trading day. For those of you here on YouTube, thank you so much, and have a great rest of your day. Those of you in the brigade, give me 5 minutes, and I'll see you on that live stream. Cheers, guys. Have a good one.